Numbers move markets, but expectations move first. The nation's indexes are five precision engineered volatility metrics that read those expectations straight from live option prices in real time. Our indexes deconstruct skew so you can see clearly what is going on in an option market. My name is Scott Nations, and I'm one of the founders here. Institutional desks already watch our indexes, so let's look at each and learn what each one tells you. VolDex is the clean, straight-ahead read on implied volatility. It uses a closed-form formula to calculate the implied volatility of precisely at-the-money options, the most actively traded, most informative strikes, to capture what the market expects over the next 30 days without the statistical noise generated by far out-of-the-money strikes that blur a blended measure like the VIX. When VolDex is high against its own history, means fear is priced in. Low means complacency. It's the anchor for everything that follows. TailDex is the first and only dedicated measure of the cost of upside. TailDex is the normalized price of the call option that is one standard deviation out of the money, which corresponds to a 16 delta for those who think in delta terms. When TailDex rises, investors are reaching for upside exposure because they expect a rally. When TailDex is historically cheap, traders and investors are ignoring calls or selling them as covered calls. That information is helpful because it can keep you from selling a covered call when calls are already too cheap. It can also demonstrate when replacing stock with calls gets attractive. When TailDex is rich, covered calls pay you handsomely. PutDex is the mirror image of CallDex. PutDex is the normalized price of the put option that is one standard deviation below at the money. That means it's the price of downside protection, so it's a proxy for fear. It's the price institutions and hedgers pay to insure against a decline, and sharp moves in PutDex have historically led market dislocations by days to weeks. Cheap puts are cheap insurance. Expensive puts are an income opportunity for those who sell cash-secured puts. But you have to have a way to gauge expensive and cheap, and PutDex provides that. As we like to say, now you're trading with data, not a hunch. RiskDex is the ratio of PutDex to CallDex. Fear versus greed in a single number. Above 1, puts are more expensive than calls. Below 1, calls are more expensive than puts. Different assets have different volatility regimes, but it is instructive to know if fear or greed is predominant. Equity indexes like the S&P always display put skew, meaning RiskDex is greater than 1, but how much greater is data traders need? Other assets like treasury bonds and precious metals can show put skew, meaning RiskDex is above 1.0, or call skew, meaning RiskDex is below 1.0. But again, this is helpful. The same is true for individual equities, which show put skew when investors are worried and call skew when they are more optimistic. And because the put side and the call side of the S&P 500 move in different directions on roughly 42% of trading days, no blended volatility index like the VIX can tell you what RiskDex tells you. TailDex prices the crash. It tracks the normalized price of the put option that is 3 standard deviations out of the money, pure disaster insurance, recalculated every 15 seconds. Extreme moves happen far more often than a normal distribution predicts, about 22 times more often. TailDex tells you what the market is paying to be ready so you can react before the crisis hits. Each of the nation's indexes is computed live all day long on the underlyings that matter. Major ETFs spanning equities, fixed income, precious metals, cryptocurrency, and volatility itself, plus the largest, most important, highest option volume US stocks. Same math on every name, so readings are comparable across your entire watch list. You can also compare the current value for any one of our indexes to the recent range or historical average for context or to generate a trade idea. Now you're trading with data, not a hunch. 5 indexes, one complete picture of what options know. Plans start with ETF coverage and scale to everything: individual equities, full history, and daily trade ideas. Go to nationsindexes.com, pick your plan, and put the same read the professionals use on your screen before the market moves.